Financial Planner, follow us on YouTube.
Jim, thank you so much for joining us today.
Oh, it's good to be back, Elijah, and I'm back with near perfect health, and my voice is, I think you might conclude my voice is pretty much normal again, and I'm glad about that.
All right. Well, I'd first like to discuss the economy in the United States. You've said that we're going through a multiple stage economic breakdown. Can you expand on this?
Remember back 15, 20 years ago, we used to boast that we're the consumer economy. Yeah, right. Extend your credit, extend your home line of mortgage, second mortgage line of credit, HELOC, home equity line of credit. We used to boast about it. We used to boast that we were the consumer economy backed by financial services and financial engineering. We are seeing the climax of the collapse of both. The financial sector has become a gigantic asset bubble backed by financial engineering, otherwise known as, not so much as offloaded risk, like with derivatives, offloaded risk that Greenspan boasted about a year before they all broke in front of his face. But the other side is that the derivatives are supporting the bond market. The whole world is dumping hundreds of billions of dollars of treasury bonds, yet the U.S. treasuries remain near the 2% mark. Why is that? Because we got a lot of fabricated demand. Well, the other side to the twisted formula as foundation for the U.S. economy has been the consumer economy, the consumer side, consumption, the retail. The United States has more square footage of retail per capita than any country in the world. Well, that's going to come back down. And we're going to move toward an international average. But the result is we're going to see a lot of emptiness at malls. I don't say empty malls. I'm saying emptiness, which means what I'm referring to is that 1 in 3, 1 in 4 mall locations, mall stores, mall units, they call them locales here, but stores will be empty. And we might see entire malls in the United States be converted into office complexes. I'd like to see them converted into software development centers where we're actually doing something, producing something. Consumption is basically eating your children's organs. Consumption is basically burning your furniture. Consumption is basically avoiding wealth production, wealth investment, like business investment, starting a business, producing something, buying some equipment, investing in people, like in job payrolls. Consumption is the exact opposite of all that, and we're seeing a climax of this heretical insanity for the last 20 years where the United States stupidity came to the fore, thinking that we could have a healthy, strong economy and a way of life that produces income to support households by consuming. Since when does a bonfire provide jobs? I mean, come on, we are just so incredibly economically stupid as a country. But, it all starts with the Wall Street bankers that, provide guidance to all this. There are various sectors in the United States that are just, a wrecking zone. The energy sector is another one, Elijah. We are not going to be seeing a return to the $60, $80, $90 crude oil price. I made a forecast about 6 months ago that we would play around at the $50 mark, but we would not go above it. And when we did, we would come back down very quickly, very soon, and that's exactly what's happening. My basis behind that was not just the shale oil production in the United States, but Iran coming off the sanctions and dumping on the market. Well, now it's changed a little bit in the reasoning for the forecast. It's the same forecast, sub 50 oil price, but it's based a little bit more now on, not more, but based somewhat in addition now on the lack of unity within OPEC, which is a fractured and broken cartel with almost no significance whatsoever. We have an energy cartel void. It's going to be filled by natural gas, led by Russia, Iran, and Qatar. Okay, so we've also got, I think, financial services, which are in a breakdown mode in the United States. You can't look at the S&P stock index and say, well, Wall Street's doing fine. No, they're not. Take a look at the IPOs for stocks and take a look at the corporate bond issuance, and you see that Wall Street is struggling mightily. And what they did as a result in the last 6 to 8 years during QE and the 0% climate is to rely unduly on bond carry trade. Borrow at the 0%, invest in the long-term bond, put on some leverage with bond futures, get a wink and a nod from the Fed that they're not going to raise rates. I mean, I don't really pay much attention to the tiny rate hikes that we have. We're still essentially rounded to zero. Would you say that the Fed interest rates are consistent with, say, the year 2000 when they were 6.5%? No, they're closer to zero. I mean, so what if there's 0.75% or 60 basis points for a short-term treasury bill? I don't care. It's largely zero. And when you're near zero, you can use derivatives to hedge and produce kind of a filter in there, a clamp filter, to render it near zero so it doesn't destroy your bond carry trade. The bond carry trade is the principal source of income for Wall Street, in addition to narcotics money laundering, which you never hear about. They're making a lot of money on narco money laundering. So we've got the U.S. economy in a breakdown mode with 24, 23% unemployment. I mean, yeah, they're boasting now that the stock market is doing well because of the low jobless rate. I mean, the fascist heresy, I call it Reich economics, is like in a climax mode. The jobless rate is the percentage of people who are receiving unemployment compensation insurance from states. Well, there are a lot of them are falling off. The Congress did not extend to 99 weeks, so a lot of them are falling off. The ones who fall off are considered, this is key, they're considered not unemployed. I did not say employed. They're not unemployed. Okay, so that's the key to the jobless rate. So we got this 23% unemployment rate. I still believe that we're over 6 or 7% for the consumer price index. I mean, that's so falsified. It's just silly, amazing. So you got various sectors here in the United States that are in crash mode. Energy, I think, is going to have a second round of painful losses and write-offs to the Wall Street banks. And we might possibly see a casualty among one of the weaker banks, say at a second tier, you know, that might service the the Texas Southwest area and not so much be a New York bank, but suffer a breakdown nonetheless. So it's interesting to see the breakdown, and there is no better indication of the collapse than the condition of the malls and the graph of money velocity. If QE was actually stimulus, the money velocity would not be 50% below where it was when QE began. Stimulus usually means stimulus, invigoration, growth, pinpricks to lift. No, we don't have any of that. The money velocity is at depression levels, and it's getting scary. It's the principal indicator that the stimulus didn't work. And it's becoming internationally recognized that QE is a failure, and the U.S. just doesn't have the integrity or the fortitude to admit it. So That's pretty much my spiel on economic breakdown.
Now, we've also talked in the past about how countries are moving away from the dollar, and you recently wrote an article about this, and I'd like to discuss a little bit how it will impact us here in the United States. You talked about in your article how the Chinese are moving away from the petrodollar. You explained that they are working on a major deal to pay for crude oil in the yuan currency. Can you expand on this?
This is a truly enormous new factor. The Chinese, to be sure, for the last 2 or 3 years or more, have been kind of angry. Why would they want to use the dollar to pay for Saudi oil? The United States is not involved in this transaction. And it really speaks to the Qing dollar shadow. It speaks to the Qing dollar's reign of terror. It's the hegemony. It's the influence. It's a pervasive presence of the dollar where it really doesn't have a role. The Chinese are angry about QE. They were sitting on $3 trillion worth of reserves, the majority in U.S. treasuries. And the United States is involved in hypermonetary inflation of the global reserve currency. I mean, any student of economics and finance would conclude you can't have hypermonetary inflation monetizing over $1 trillion of U.S. government debt in the same currency that's being used as the global currency reserve, serving as the asset backing and foundation of the global banking system. So the Chinese are pissed off. They have been working for the last 2 years or more at workarounds. And the principal area of irritation for them has been buying Arab oil and having to pay in treasury bills. The Saudis, Kuwaitis, Bahrain, Oman, they all say the same things to the Asians. You got to use treasury bills to pay here because our whole financial structure is designed around the U.S. treasuries. That's how the Arab nations, Gulf region, set up their financial structures. They got all their money, all their surpluses built around treasuries as part of the petrodollar accord. Well, that's all fracturing, and it has been fracturing for the last 3 years. I've been talking about the fracture on a regular and frequent basis and various aspects of it, like using the phony UBS and Credit Suisse legal charges and prosecutions in order to get access to the Swiss bullion banks to steal the Arab gold. Okay, that was back in 2014. That's when it started. That was part of the early fractures of the petrodollar. That was your big hint. This is all coming apart. Well, the most recent has been the Qatar focus by the Saudis, the big internal battle within the Gulf, the big threat by the Saudis, which is really an extra appendage coming off the U.S. military complex, threatening Qatar. The irony is thick because Qatar has a huge U.S. military presence. So the Saudis are threatening a U.S. military presence monarchy. Okay, back to the Chinese. The Chinese are now in a position, based on events that are on the table, to improve their leverage. Okay, to begin with, they don't want to use the treasury bill to pay for Arab oil. They'd rather use RMB. And the Saudis are saying, well, we don't want to hold your Chinese government bonds in RMB terms because we're not set up that way. Chinese are saying, change your setup. But the Chinese are now in a position to say, we're going to seek other suppliers of oil besides the Saudis. that are willing to accept RMB. So you've got this 20% growth, incredible, like 25% growth in the last 3 years of Chinese purchase of Russian oil. And they're buying it with RMB. And the Saudis are watching this. The Chinese have bought, I think it's around 10% less oil in the last 3 years from the Saudi source. So the Saudis read the writing on the wall. The Saudis get the messages. The Saudis are still doing these frequent conferences between Riyadh and Beijing. They're not just cultural exchanges, they're business consortium meetings. You know, investments by the Chinese in Saudi Arabia. The Chinese are trying to buy more and more malls in Saudi Arabia. Okay, now finally, events on the table have enabled the Chinese to use a little leverage. I'm referring to Aramco, the Arab American company. That's what it stands for. Aramco is the gigantic trillion-dollar petrochemical complex conglomerate in Saudi Arabia. Well, they decided in Saudi land that they wanted to sell off 10% of their assets. And it's really kind of funny because the Saudis have been lying about excess capacity. I remember when I started the newsletter in 2004, by 2005 and 2006, I started to realize that their claims of spare capacity, which just means oil production facilities that are temporarily turned off that could be turned on at any time, that those were lies. They didn't have much spare capacity. And the indication that was glaring was that Gawar, way back then, turned over 90% in their water cut, which meant they're producing 90% water, 10% oil. In other words, Gawar is depleted. Now it's 98% or more water cut, and their giant oil fields are pretty much all drained, and they're left with numerous smaller oil fields. They're still producing, but the lie is that they don't have any spare capacity. And the bigger lie is their claims of hundreds of billions of barrels of oil. They're all lies. And that's why they're having a war with Yemen, to steal their entire untapped national oil and gas reserves. And the West is helping them out because Saudis are part of the petrodollar scheme. But the Western energy analysts who are watching the IPO for Aramco have concluded that the price is wrong by a factor of 4 or 5. This has never been seen before in the history of the energy market. They're comparing to ExxonMobil, they're comparing to Rosneft, they're comparing to Dutch Shell. These are the giants. And they conclude that Aramco is not worth $2 trillion. It's worth something like $400 billion. So if they sell 10%, they better adjust the price. Now here's where China comes in. The Chinese might say to the Saudis behind the curtain, behind the tent, they might offer the Saudis an extra vig on the investment for Aramco stock. They might offer them 50% more than it's really worth. In other words, they might offer something that's not 4 times overpriced, but just double overpriced. Why would the Saudis invest in Aramco and overpay? Because then they could dictate some Gulf region political decisions. Because then the Chinese might say, we're a shareholder, we're a board member of Aramco from our significant investment, and we're going to grant ourselves the right to buy Saudi oil in RMB terms. And then the whole set of dominoes begins to fall. It I think, is going to be the most significant event, pardon me, behind the petrodollar collapse, which is well along. Now, if you've got 40 years of the petrodollar in existence with all its structural makeup, you're not going to break that down and kill it in 2 or 3 years. You're going to break that down and weaken it severely in 2 or 3 years, but it awaits a climax event. The climax event could be the Chinese buying Arab oil, not just from Saudi, because when Saudi neighbors see RMB is used to buy Saudi oil, the other nations like Kuwait and Oman and Bahrain, they're going to say, all right, that's fine with us too. You can use RMB to buy. And that's just the seller side. Then you're going to get the buyer side. You're going to have neighbors to China in the Southeast Asian area, in the Pacific Rim. I don't want to name nations because I don't know exactly who it's going to be. I think they're going to line up 3 or 4 of them and say, we want to use RMB too because we're changing over our banking system and we're getting rid of treasury bonds at a rapid rate, and we'd rather use Chinese government bonds in our banking system and buy oil with RMB and back it up with those RMB bonds in our banking system and not the treasuries. So this is how things break down.
So how do you see this all impacting the balance of power? Will then power be removed from the United States?
Definitely, because if the dollar is not used for oil trade on an exclusive basis, you're going to see an acceleration of the already high, heavy flow torrent of treasury bond dumping that's very apparent to Wall Street. They write about it. They're worried about it. And I think they incorrectly believe that the U.S. will respond effectively with the Fed actions and hidden QE. That's what's supporting the Treasury bond now, hidden QE. I mean, they talk about 40 and 50 billion a month. I tell you, Elijah, it's one of the biggest lies in the history of U.S. finance. It's more like $1 trillion a month. For actual Treasury bond purchases, it's probably at least 200 billion a month to cover all that's being dumped and to cover the U.S. government bills. We're having an acceleration of the U.S. government deficits right now. We're setting monthly records. Where are the buyers? There aren't any. They're dumping. So why isn't the U.S. Treasury bond sporting a yield over 5 or 7%? Because the Fed's monetizing it. They're using hyper-monetary inflation to cover the debt of the custodian nation's government that has the global currency reserve, which is used in the global banking system. This is heresy. This will not stand. Okay, the bigger expense that covers what I call the 2 to 5 trillion a month is for derivatives. And it's very hard to explain it all. And to be honest, I don't understand it 100%. I think I understand it like 50, 60%, which is sufficient to make some conclusions, but it's not sufficient to make excellent explanations. When countries dump treasury bonds, it causes a leveraged reaction behind the curtains. And the leveraged reaction involves the huge structure of treasury bond derivatives and leveraged entities which are supported by the Department of Treasury's Exchange Stabilization Fund. And I believe the core behind that is $3 trillion at least of Saudi treasury bond reserves that we refused to make available to their country. You can't tell me that the Saudis had 100 to 200 billion a year in surpluses for 30 years. Yet they have only 150 billion in surpluses now. I mean, I'm pretty good in mathematics, if you know what I'm trying to say. I'm pretty damn good in calculus. I'm pretty damn good in the mathematics that are above calculus. So when it comes to basic arithmetic, you morons in Wall Street and Washington, we figured you out. The Saudis had 3 to 5 trillion in treasuries sequestered and stolen. And the only big question involved is whether it was part of their agreement back in the 70s. Were they told you have to fortify the Exchange Stabilization Fund with regular and frequent contributions, like 50 to 80 to 100 to 120 billion dollars a year in order for the United States to financially rig all the markets? Was that the deal for the petrodollar? The recycled petro surpluses? That is precisely what I think the deal was with the Saudis. So what's the balance of power that you had in the question? If the dollar is not used for oil trade on an exclusive basis, then some momentum is going to build for the dollar not to be used in general trade, like for grain shipments, like for cement and lumber shipments, like for coal or copper shipments, like for international contracts. And the example I like to give is the Indians make an information technology contract with an Arab nation like the Saudis for their health industry, and it's $1 billion a year paid in dollar, the contract written in dollars. Okay, I've been hearing for the last several months, not too much in the last few months, I've been hearing about a huge treaty where international contracts written in dollar would be converted into written in gold. And the Basel bunch of corrupt central bankers, that hive of uber-lord bankers, they're part of this negotiation toward a global treaty. It would be to convert all international contracts written in dollar, like, commercial trade, purchase of oil, lumber, coal, silver, copper, international contracts for services, all these international contracts written in dollars. I'm told that the negotiation is to rewrite them, convert them into gold, and to do so at a $5,000 to $7,000 price. So it's causing a big snag because the U.S. and the British banks are realizing that as soon as that is enacted, the dollar is dead. So that treaty might be one of several parts for the global currency reset. As less and less dollar usage in trade settlement is realized, you will see a massive dumping of treasuries in global banks. And that will essentially mark the end of the dollar's status with the global currency reserve. It has two sides: using the dollar in trade settlement for payments and using the dollar in banking reserves for core assets. The two sides, trade and banking. When that is evident for less and less dollar usage in both trade settlement and bank reserves, you will see the pressure for the U.S. economy hitting at a screaming high level, because the threat will be for import supply. That's where the big threat is, Elijah. And the threat of import supply cutoffs or reductions, not so much a halt as a much slower flow. It'll result in shortages in the United States economy, but it'll also bring about pressures to create a new currency. And I don't believe that these new concepts like the SDR bond out of the IMF, International Monetary Fund, I don't think these SDR bonds are going to be the solution that assures the continued flow of import supply to the United States. I don't think it's going to solve their problem. The only solution is going to be a new Scheist dollar. And I don't know if you want to get into that whole topic, but the new Scheist dollar, very rough cut, will be a devalued currency that continues in the pressures for devaluation because U.S. fundamentals are so wretched. You can't have a 500 billion annual trade deficit without continued devaluations. You can't have an annual $1.25 trillion federal deficit that needs to be funded without a continued pressure for devaluation. So these are going to cause a lot of pressures for the United States to bring about a different currency, because if the dollar is rejected internationally, it's going to cause problems for the import supply chain to the United States, and they've got to solve it, or else there's not going to be much moving in the import supply chain. It's going to bring about inflation, supply shortages, and a lot of civil disorder. Nice way of saying riots is civil disorder.
Now, I'd like to get to viewers' questions. There's this one viewer's question that has to do with exactly what you're talking about right now. They ask, as a retired American, I'd like to hear your analysis regarding the immediate impact of a dollar collapse on citizens living in the city. That is, do you anticipate riots, disruption of the food chain, shipping, etc.? What will be the role of bartering using tangibles like silver? How long will that last? Finally, as societies are reestablished, what will be the relative value of gold and silver to buy a medium-priced home? Let's just start with the first part of the question. What do you think the immediate impact of a dollar collapse will be?
I've never talked about a dollar collapse, so your whole premise on the question has nothing to do with what I've been talking about. I've been talking about a dollar vanish. Okay, this is one of the often done misquotes of my analysis. I have been saying steadily, like a song that doesn't end, the dollar will rise, 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 stall, and then vanish. I have never talked about a dollar collapse. So please don't put words in my mouth about my forecasts, which I have never said. Okay, so the question is, let me change the question. When the dollar vanishes, what will the pressures be? Okay, when the forces build, whereby it's exporters abroad constituting the U.S. imports. Okay, that's it. So, you get import-export a little bit messed up. Their exports are our imports. Okay, when they start to reject the dollar, they're going to be making comments like, we'd rather receive Chinese RMB for that shipment that goes to Staples or Target or Walmart. We'd rather get euros because they're less dangerous than dollars. We'd rather get gold trade notes because those can be worked, with eventual gold shipments on a net basis, and it's a whole lot safer and with a more stable core. Because when you do a shipment, you put down some equity. And the equity currently is treasury bills. Okay, so in this society, he talked about rebuilding society. You don't rebuild society, you continue to see it degrade. We haven't had the climax of the degradation of the U.S. society yet. You don't rebuild the U.S. society yet because it has not fully degraded and deteriorated and been wrecked. The households now are being wrecked. You got a higher percentage than ever seen in U.S. history of adult children living with their parents. They lose a job, they move back home. I actually moved back home 20 years ago to my parents' home for a year. And, it was an interesting experience. I helped them out because they were aging. I shoveled the snow and I went to the supermarket and did stuff like that. The breakdown of the U.S. society is not complete. We're not rebuilding jack yet because it hasn't fully climaxed. The impact on the U.S. society is going to be empty shelves, not completely empty, but you go to Walmart, you go to Target, and you see a third of the aisles are empty. And some of your favorite items are not there. And you go to Sam's Club and you see the same thing. You go to Staples, you see the same thing. You go to Best Buy, you see the same thing. You complain that you wanted to buy this particular stereo made in Korea, like Samsung, LG, And they tell you, well, I'm sorry, we don't have that Korean supply line anymore. And they don't tell you why. They just tell you we don't have it. You read further in competent journals, and you'll learn, for instance, that these Korean conglomerates don't want treasury bills and payment anymore. They want RMB because it's more stable, because they're not printing RMB to cover their government debt, monetizing like a South American or African country does. Now, will there be barter? Yeah, there'll be barter. Now, he mentioned barter of using silver to buy things. That's not barter. That's using silver as a form of money. That's using silver in lieu of money, which would then therefore be a manifestation of its monetary role. It's an interesting distinction. In other words, silver might return to its monetary role. I have a saying, it's not a joke, it's a saying, that there will come a time when silver is used to buy food, to buy hardware, to buy clothes, to buy gasoline, but gold will be used to buy a home, to buy a business, or to pay off a large debt. Gold and silver. Silver for the street, gold for the big building. Other forms of barter. Let me just explain something about barter so people have a better idea. It's a word thrown around without a lot of great comprehension. 300 years ago, 350 years ago, in the area now called the United States, there was a lot of barter. They'd go to trading posts. Chicago and St. Louis were two of the very largest trading posts in the world. They would trade beaver pelts for food supply. Okay, that's barter, but it's also a manifestation of beaver pelts serving as money. How many beaver pelts do you have saved up in your shed? Because they're going to be valuable when you go to the trading post. That's a form of stored value, i.e. money. The example I'd like to give is from my sister. I am happy to say that I have a détente and a rapprochement with my sister in the last month because of various things that have happened in the family, like my father's deteriorating health. He's closing in on 100 years. So the patriarch of the Jim Willie family is really, he's falling apart. And it's causing some family stresses and family needs and discussions. And my sister has softened her position on some things, and so have I. And I prefer to speak of my sister in a more kindly light. Well, here's something that she has done as a divorce attorney in Pennsylvania for 20 years or more. She's doing very well as an attorney. She's a partner in a firm. I could go on in praise of her status, but she's doing extremely well and being recognized in her trade. She has done barter. A guy will come into her office, and this happened in the 1990s. She told me about it and kind of giggled, and she said, Jim, it works. A guy would come into her office and say, I need a divorce. Forget the reasons for the divorce. There's a divorce. There's a cost. There's a procedure. There's an asset distribution. It's just the standard thing. They're kids, so there's custody agreements. But it turned out a couple times that there was a plumber. He said, I don't have $2,000, Chris. What do I do? And she said, well, how about if we set up a deal for the next 3 or 4 years, because I have some plumbing needs in my home. And I need some new toilets, and I think I need a lot of new basic plumbing in the basement for the feeder lines. And I think it's going to be at least $1,000, so why don't we start with that? So I'll do your service, and you provide me with, say, we'll just start it off at $1,000 of bartered service for plumbing. And then a couple of years later, an electrician came along. And she doesn't have as great electrician needs. But then a carpenter came along. And she wanted to remodel her basement and put paneling on the walls and put a little center there for dancing and, put a little stereo over on the side and put it into the wall with a ledge. And okay, you get the idea. Plumbing, electrician, carpentry. She bartered for legal services. Okay, not everybody can do that. I could do some bartering, like for a subscription service in return for bicycle maintenance. It doesn't amount to $200 a year. My main bicycle expenses are for inner tubes, because I think one of the national sports for Costa Rica, especially in their urban centers, is to toss glass bottles out the window against a cement wall or a brick wall or a stone wall and have a lot of fun while they're drinking and driving. I think that's one of their national sports. Because when I'm riding my bike along, I am continually focused on glass. Glass shards on the sidewalks and the streets. When hundreds of cars go past, it gets pushed to the side of the street or avenue or boulevard. And that is exactly where bicycles run. So I try to go on the parallel roads. Anyway, my main expense is bicycle inner tubes, and I probably buy 6 or 8 per year. Whereas in the Boston area, I would buy 6 or 8 per decade, because they didn't have a national sport of throwing glass bottles out the window while drinking and driving. It's a form of social protest in Costa Rica that is abhorrent. I can't do barter. Other people can. I think we're going to see springing up community consortiums of barter, where you join a barter club and you can have a list of services like plumbing, electric, and carpentry. Now add on, say, clothing, because one of the people in the barter community has a clothing store. Now add hardware, because one of the people in the community for the barter owns a small hardware store. Now add office supplies, because one of the people in the community barter center has a office supply store. Okay. So you get the point. Barter could become a community venture. Join the barter system with ABC neighborhood, and it's a large neighborhood with 100,000 people, a section of a city, and you can buy things and sell things, because you might fit into the barter system for the service you provide. But if you don't provide a service, don't provide a product, you cannot join the barter system. Okay, that's how barter might spring up. And my sister is way ahead of the curve in that, but she told me a few years ago, Jim, I don't do much barter anymore because I don't need much anymore. I just turn them toward like a public defender who will do it for free. And then they have to get, the lower quality work. But sometimes it's not a real difficult case. It just has to go through the procedure. I think silver might become a coin of the realm a lot more than gold, because silver will be more valuable in the daily life demands that will become critical. I'm talking about food. I'm talking about supplies. Basic supplies like socks, like a shirt, like a piece of wood. The gold coins, they better come down to 1/10 of an ounce. I mean, Canada's way ahead of the curve on this. Canada, for the longest time, had 1/10 ounces. I had an opportunity in 2009. A client came by, said, Jim, I'm a client of yours. I've been a Hattrick Letter subscriber for 2 years. And I want you to take a look when I come to town. I said, okay, sure, I'll be glad to meet you. He did come to town, and he showed me he had 500 gold coins, gold ounces. But among them, something like 50 ounces were in the form of 1/10 ounces. So he had 500 different 1/10 ounce Canadian gold coins. And I said, wow, they're cute. They're really nice. They're about the size of a U.S. dime. They were pretty. They had pretty much the same markings as the Canadian maple, but I didn't personally buy any. He said, no, unless you're going to buy like several $1,000s worth, like $20,000 worth, Jim, I don't want to sell you any. I said, okay, because I was going to maybe buy 1,000. He said, no, I don't want to divvy it up like that. Okay. He said, he actually said to me, one day we're going to have demand for these 1/10 ounce gold coin. We're going to see demand grow. We're going to see them grow in popularity. We're going to see them in wider usage. And I said, yeah, I can see that. I mean, right now it's worth a little over $100. Like back then it was about $1,500 for gold price. What did the guy do? He took his 500 coins, he went to Panama, sold them all in 1 month. There was no place in Costa Rica to sell it. They have no market. But Panama is a huge financial center, and it's got a huge import-export center, and it has a huge banking sector. And it's not just the canal, et cetera. Oh, no, it's a lot more than that. It is pretty much the Switzerland of Latin America. I don't say South America, I say Latin America, because they've got a lot of accounts from Mexico, Guatemala, Salvador, Costa Rica, Nicaragua, not so much because it's very poor. But you know, it's a big center there in Panama. Okay, that's my spiel on barter. I hope that serves a purpose, because barter is going to become big, and the biggest high-level barter. Last point. Very high-level barter has been, not will be, but has been for the last few years between China and Iran. They just establish contracts and say, well, we'll supply the oil and gas, you supply the finished goods, cars, motorcycles, television sets, stereos. And Iran and China have a good deal going, and it's several $1 billion a year in barter. Well, gosh, why do they do that? Because we set up sanctions against them. And they don't roll over and die. They react and do workarounds. Iran is the most successful global player in U.S. sanction workarounds and has become somewhat a model for the Eurasian trade zone to follow. Barter at the high level between nations, barter at the low level in neighborhood community centers that might spring up someday. Very interesting, Elijah, and it's going to happen, it's going to spread.
This one is from Daryl Davis, and he wants to know, do you expect the U.S. to accept both the dollar vanishing and the ascendancy of the East without a single shot fired? If so, how will the U.S. become a third world nation while it's also possessing the most powerful arsenal in the world?
Well, let's just start with the first misconception. The United States does not have the most powerful arsenal in the world. This guy sounds like he's reading the New York Times too much or watching CNN too much. The U.S. has the largest sprawl of military bases, but no longer is the most powerful military. We've suffered 20 years of attrition, and we no longer have the best strategic weapons in the top 10 categories. So your premise is wrong. What's coming is what I believe, this is the name I've called it, the dual universe. It's going to be the U.S. dollar coexisting with the RMB of China. So the fellow asked in his question, how will the United States become a third world nation if we own a military? Excuse me? How are the sanctions against Russia working? Excuse me? How are the sanctions against Iran working? Excuse me? How are the trade friction and trade wars against China working out? You read New York Times and watch CNN too much, my good man. We're failing on all our foreign policy initiatives. Every single foreign policy initiative since Bush 2, since 9/11, has been a massive failure. So when the global currency reserve is lost, that's when the pressures build, as I explained. But this gives me an opportunity to launch off in a bit toward the dual universe. Now, we're seeing the Saudis pressure Qatar. This is basically the petrodollar advocate of the Saudis attacking the Iran-Russian gas pipeline advocate in Qatar. How's that battle, even in the last 6 to 8 weeks? It's not escalated. We actually have the Saudis backing down. We have the Saudis finding no support among other Arab neighbors for attacks on Qatar. We have the Saudis now changing their demands toward suggestions. We now have the Saudis talking about contingency plans toward a more peaceful coexistence. What we have is a microcosm of Saudi versus Qatar, serving as a lesson on how this is all going to turn out on a macro stage. The macro stage is the U.S. government making some formal statements that if Eastern Hemisphere nations prefer to conduct trade in RMB terms, the Chinese currency, then that's fine. It's their own business. And that will essentially be the United States waving a white flag over the entire Eastern Hemisphere with respect to the global reserve currency structure and status. What they will be saying is, if two Asian or Eastern nations wish to conduct trade outside the dollar and banking outside the dollar, trade payment banking reserves, the two sides, always important for global currency reserve considerations, then the United States doesn't have a problem with it. They're going to make some arrogant, stupid-ass comment that the RMB is never going to go anywhere. But they'll be wrong because the RMB will continue very strong growth in trade payment usage, especially if the Saudis accept RMB from the Chinese and other Southeast Asian, Pacific Rim emerging market nations. And the United States will be wrong in another respect, because when they say the RMB will never turn into anything, they'll be wrong because they're going to eventually turn into a gold-backed currency. And I think it's going to merge with the Chinese adoption of the gold trade note, which will be a short-term trading vehicle with a gold equity margin put up front, settled in gold on a net basis. And the key point is a net basis. If two nations are doing gold-backed trading with respect to a gold trade note, then at the end of the year, end of the quarter, whatever the period of time is they agree upon, they will do net settlement. And if, for instance, Bolivia has a tremendous amount of shipments of industrial metal and silver, copper, etc., or Chile, and China has an enormous amount of shipments of cars, motorcycles, and home stereo equipment, whatever, and clothing, the net might be close to zero. And if it's not zero, it'll be settled in gold after that quarter of a year or full year. That's what net settlement means. Okay, so my point is that the U.S. is going to raise a surrender flag, a white flag, and it'll be visible to the Eastern nations, as in the Eurasian Trade Zone, the One Belt, One Road community of nations. And they're going to say, you want to use RMB for trade and banking? Fine, go ahead. Okay, that's what I believe is coming, the dual universe. And I'd just like to back up my statement at the beginning of this response, where I said the U.S. is not a predominant military force. If we were a dominant and decisively dominant military force, would we not have won the Syria war by now? If we were the dominant military force, would we not have an inferior cruise missile when the Russians have the Tomahawk? I'm sorry, Tomahawk is the cruise. When the Russians have the Sunburn and Onyx missiles with 10 times more accuracy and triple the range, would we be the dominant military force given that the Russians have and Chinese both have 1 generation more powerful electromagnetic pulse weapons that they've demonstrated twice with complete wreckages of U.S. naval vessels? Had to go back to the Chesapeake, completely burned out. Would we have dominant military power if the Russians, back with the USS Donald Cook 2 years ago, had the incidents where the MiGs or the Su fighter jets from the Russian military, Russian Air Force, there was an enormously important event. It was something like a group of 5 Russian jet aircraft circled the U.S. Donald Cook, disabled the U.S. military Aegis system, jammed it with an advanced jamming system, did flybys for the next 30 minutes, flipped the bird, did not attack the Donald Cook, and let it be known that they were vulnerable for half an hour for complete destruction and a death to 500 naval servicemen. The Russians did not pull the trigger. Okay, that was very well observed by the Pentagram, but apparently not observed by the person who wrote the question.
All right, well, moving now to our last viewer's question. This one is about cryptocurrencies. They're wanting to know, do you think cryptocurrencies and blockchains will replace the dollar? And if so, how will central banks and the Bank of International Settlements still have complete control over the system?
They cannot have complete control of the system. That's why the cryptocurrencies have been hatched. The entire structure of the cryptos is decentralization. The entire structure is designed to prevent central power in Basel and the US Fed and Bank of England. This is a very, very big topic, and I'm happy to say that I have solicited assistance from half a dozen very smart people who are well versed in this area. And they're supplying me information, they're answering my questions, engaging in conversations, and supplying me with reading material and viewing material. I mean, like articles and YouTubes. And I'm not up to speed yet. I'm an honest broker of financial and economic information analysis. I prefer to be an honest broker my entire career. I'm coming up to speed. I'm not there yet. I'm learning a lot, and I have learned a lot. But here are some of the things that I believe are the case. More than the cryptocurrency, the importance right now is of the blockchain. The blockchain with its smart contract features, with its encryption of the data. And I like to give an example so that people can understand this with something tangible. Pardon me. Early in the 2000 decade, there was something called MERS, the Mortgage Electronic Registry System. It was for storing titles for property and linking them with mortgage bonds. And it was probably the most fraudulent database in modern history because the titles were used for multiple mortgage bonds. The managers of MERS were Wall Street banks. And they like to explain that because of the rapid turnover of mortgage bonds, there was confusion in the MERS database. No, there was designed fraud and cover-up of the fraud with pretty much baseless explanations of why the errors took place. The MERS database was supposed to keep straight all the linkage of the secure streams from individual home mortgages with the compositions that they were part of in mortgage bonds. Like a mortgage bond would have a tranche with, say, 150 different individual mortgage streams, individual homes with payment structures. But the problem was the MERS database was revealed as showing that 2 to 3 different mortgage bonds were using the same title, the home, the same mortgage income stream. The fraud was unbelievable. If the MERS database had been a structured database within the blockchain, that would not have happened, and it would have been discovered in the first couple weeks, instead of having this flourish for 4 to 5 years and creating the subprime mortgage bond bust, the impact of which is still being felt almost 10 years later. Okay, the blockchain, this is my understanding, and it's still early learning period, but the blockchain would set up information items and lock them in the blockchain, encrypt them, put in the person who entered it and his identity, her identity, or the firm's identity, and move on to the next piece of the blockchain, which would be the sale of a mortgage bond. And that would encrypt the details for it, like the size of the bond, the issuer, like say Merrill Lynch, the value of the bond, the terms of the bond, like the interest rate at launch, the fee structure, and the individual titles within the mortgage bond for the secure stream. And then it would move on to the next item. I'm talking about the MERS database being part of a blockchain database structure to prevent fraud. But Wall Street prefers fraud, so they don't like blockchain. And that's where the threat lies. If blockchain flourishes with lots and lots of various contracts and structures for contracts, we're going to see Wall Street marginalized, because a new financial entity might come onto the scene saying, we manage a lot of different blockchain smart contracts, and we assure their validity, their honesty, their integrity, and Wall Street is cut out. The intermediary is cut out. And the cost structure goes down for managing it, while at the same time, the integrity increases. This is why Wall Street is probably going to employ the Langley whiz kids to hack into it, like to steal wallets. If someone were to ask me, what is the weakest link in cryptos and blockchain, I would say the wallets, because they live on the fringe. Now, they could be encrypted and kept safe, but if novices are involved, they might not be kept very safe, and they might live on the fringe in a way that can be hacked more easily than others. If someone were to ask me, what's the biggest threat right now to the crypto space, I would say quantum computers. Now, I come from a computer science background, and I'm trying to figure out exactly what a quantum computer is. All I have concluded is that it's a powerful supercomputer with various internal features, like the central processing might be multi-array, that sort of thing, multi-bus, multi-array. And what is the advantage of a quantum computer? Well, they could break down a 256-bit encryption pretty easily. They can possibly break down 1024-bit encryption over time. Get the quantum computer to work hard for a good 3-week, 6-week period, and it could probably break the encryption of a 124-bit code. Okay, so we're going to have a battle with the encrypted space for both currency and blockchain contract constructions. We're going to have a battle. And the battle is going to be Wall Street plus Langley with their quantum computers battling against the encryption. Because if they could break the encryption of a lot of wallets with a flimsy 256-bit encryption and steal the wallet contents like they did a few weeks ago, they can undermine the confidence of the system. But what they'll end up doing is they'll force the system to make better encrypted wallets. That's my theory. They're going to move quickly up to 512 for bits in the encryption and make it more difficult. But, people can do smart things like, have a devoted little USB drive on the side to hold their contents. This is part of what I'm learning. I mean, I'm an honest broker. I will admit what I don't understand. I'm trying to understand how the wallets are kept safe and how they're kept out of the ecosphere where they could be attacked by the more powerful computers and decryption machines. Because believe me, when I say that Langley has some of the smartest people and some of the most powerful computers that narco money can buy. They've been funding their black bag ops for a long time. And now they're funding entire armies. It's called ISIS. If you run out of your standard Pentagon budgets for military endeavors and adventures, then turn to your Bush narco arena with its several $100 billion in profit per year. There is over $800 billion in revenue coming from Afghanistan heroin per year alone. Okay, so the crypto space, that's what I call it, crypto. I mean, it's more than a business. It's an area of research. It's an area of development. I just got an email this morning from someone who said, isn't the entire crypto space a central bank initiative? And I said, no, it's the exact opposite. This is an attempt to set up currency for movement across borders. I mean, I've got a client who said to me, Jim, I live in Argentina and I've got a U.S. bank account and I move money from my U.S. bank account into Bitcoin, and then I undo the movement from Bitcoin into my Argentine bank account, and I don't need central bank approval to do it. I said, wow, that's kind of neat. I need to learn more about that, and I am learning more about that. But I'm not an expert yet. When I feel like an expert, I will claim that I am a low-level expert, but I'm not there yet. The crypto space is going to see attacks. They're also going to see Trojan horses. One of the funniest stories I heard, pardon me, a little while ago, was that JP Morgan developed a crypto coin. Pardon me. I need a little water. JP Morgan invested $200 million in a new crypto coin, but it was centralized with JP Morgan maintaining control. I mean, this is so ridiculous. I don't even want to come up with an analogy of how stupid that is. But they wanted centralized control of their cryptocurrency, which violated one of the two main rules. One rule is it's decentralized. The second is that it's encrypted for its data. Okay, so a few weeks passed. They had an IPO launch, an ICO, initial coin offering launch, and the value went quickly to zero. You just gotta laugh at stuff like this. Well, now there's a new crypto initiative that I'm trying to wrap my head around, and I will know more before the August report is posted. It's not posted, it's being written right now. But the new SDR, digitized asset with their ACC database, or whatever it is. I honestly, I can't remember what ACC stands for. I'm trying to learn about it. I'm doing some other work, and I'm kind of circling this wagon right now with the SDR crypto initiative. But they're trying to digitize assets, and they've got an initial stage of where they're doing it in Texas. Like there's some property that's being digitized, meaning their titles are being put in the form of a blockchain. And it's a test case. I don't know how it's going to turn out, but I hope it reveals some of the fraud, because wherever the IMF and the banker cabal is involved, they have two main features that always show up: central power and fraud. And I'm looking to see where the fraud is, because I can already see where the central power is. The central power is in their blockchain to hold the digitized assets, the titles. And I'm thinking that they're going to try to enable some super level of title ownership of all Western property assets. Kind of like the lords of England who own all the property, and you don't buy a home, you buy a 100-year lease from the lords who own all the property in London and England. Okay, that's what I'm sensing. I'm sensing that they're going to put in the London Lord property feature in their SDR title database for property. But I'm looking into that. I don't think their SDR is going to be successful, their new SDR, because it's centralized and because the custodians are not trustworthy. But I'm learning about it, and I'm soliciting opinions from my jackass team. We got, 8 or 9 big brains, and it's nice to have multi-processing on some of this. You put 8 or 9 big central processes together, like in the old days, big VAXs for digital equipment, and you get a cluster, and the cluster is very powerful, and you get multiplicative benefits from putting the processors together. And that's what I think has come to pass with the hat-trick letter. The opinions of The Voice and London Paul and Euroraj and Rob Kirby and others now, like Sky Crane, who is turning out to be a very proficient student of the cryptocurrencies and a beneficiary of some of its growth and value. I don't want to get personal, but he and I have lunch once in a while, and he explains some things. So he's turning out to be something of a mentor, not in any big full-fledged fashion, but I want him to become in a bigger role as a mentor for the crypto space, because he's very knowledgeable and explaining to me why Ethereum is not so vulnerable with respect to required learning of a specific language. And anyway, he goes on and explains, no, that's not a weakness, Jim. Don't worry about that. So I'm not going off in a wrong direction for a construct for one of the crypto's weaknesses. Very, very interesting. So what else can I say about cryptos? They're not going away. They're going to grow. They are with the potential to put a very deep wound, I don't want to say kill, a very deep wound in the London and Wall Street banking financial services center. I mean, like, say, bond issuance, just for instance, just that. bond issuance. Suppose that gets taken away and ends up in something, I'll just throw it out, in some firm that builds upon the Ethereum platform. Okay, that would be very interesting because its integrity would not be questioned like Wall Street. How many lawsuits have been completed with settlement for Wall Street banks in just the last, say, 15 years? The total settlements is over $280 billion for fraud. Okay, that has provided the impetus for developing the crypto space, for making smart contracts. The beauty of the smart contract is not just that it's smart, it's that it's honest and enforceable. Honest, transparent, enforceable, and verifiable. And that's where some of the power lies.
Well, thank you so much for joining us today, Jim. Did you want to quick share with the viewers where to find you online?
It's www.goldenjackass.com. It's been just about 13 and a half years now. It's been a labor of love. I keep saying that. I love this work, even though there's not a lot of statistical analysis in there. I miss the days of taking a giant database and having some important questions to answer and 6 weeks to do it. I love that, but I don't have that opportunity. I've taken my marketing research background and method of thinking and turned it into the bank analysis, currency analysis, and gold world analysis. Now I'm going to turn it to the crypto space analysis. And the result is the hat trick letter. This month is going to be month number, I'm looking at the calendar, 161. Issue number 161. That's a long time. I remember when I first met Kurt Rickenbacker in Cannes on the French Riviera, I said, Kurt, how many monthly issues do you have? And he said, oh, I'm up to 245. Okay, that's a long time. Well, I'm more than half that now, and it's been a long time. I'm going to be an old geezer when I hit 200 months. Well, that's not quite the case. When I hit 300, I don't know what the world's going to look like if I hit 300 months, but the monthly newsletter, pardon me, comes in two parts. It's a global money war report. And, you know, just for the long-term subscribers, walk down memory lane, it used to be called the macroeconomic report. Now it's called the global money report. Okay, the other report is called the golden currency report. And that has really not changed much, except in the last 2 or 3 years, I've been including a chapter on the development of the Eurasian trade zone. Because I always had petrodollar issues, oil issues in the golden currency report because the petrodollar was a currency construct. Okay, so there are two main reports. And you know, there is some common ground. I mean, sometimes one report is longer than the other, and I just move a section regarding European banks into the other report. All right, so they're not defined and strict content. There are 2 reports per month, and I try to divvy it out, divide it into two sides. Okay, the main web page, main 5 HTML, it contains free content. It's in the public domain. It has the interviews with links. It has the public articles, which I'm writing more of. I'm trying to write more public articles and shorter ones, you know, particular theme, like recent ones having to do with the fraudulent Saudi arms deal. That was just hocus pocus, a lot of hand movement, like the advent of the natural gas cartel to replace the petrodollar and OPEC. What is the petrodollar's cartel? It's OPEC. OPEC has enforced the dollar standard for a long, long time with its leader, Saudi. Okay, another public article was just about the global currency reserve, what it meant and what the risks were for losing it and how we might lose it. And that's why the Chinese purchase of Saudi oil and RMB term payment comes about. So I'm writing more public articles. I continue to do the interviews. I love them. They're a lot of fun. They're actually more fun than writing public articles. I'm busy writing the main hat-trick letter, so my fingers are already tired from typing with the hat-trick letter. So I don't like doing much in the public article. That's why I'm doing shorter ones. So I hope people go to www.goldenjackass.com, bounce around, sign up. And 2 compliments I'd love to mention are I was away from the hat-trick letter for a couple of years, and I'm back. I wish I'd never left. The other compliment is I've been relying on your podcast for the longest time, and I recently signed up, curious about what the report involves, and I wish I'd signed up long ago. So those are very nice compliments to get. But I'm getting, more than a few in the last year. I lost my job. And it's hard to see. Hard to see. And what it means is the U.S. economy is accelerating in the recession. You can make an argument that we've been in a depression for quite a while. And I think the actual existence of quantitative easing and bond purchase, AKA hypermonetary inflation, I think that is in response to the immediate threat of a depression. So take it away, you get the depression. We've been in a depression, a quasi-depression now for 6 years. Don't believe this 5% unemployment figure. It's more like 23. And lots of data to back that up, like the participation rate. 1 minus the participation rate is the unemployment rate, people. Wake up. What I'm saying is if they claim that we have a 65% participation rate, then we have close to a 35% unemployment rate. But to be sure, there are some people who are, infirmed, sick, just can't work, or in school, or just Mr. Mom at home raising kids, or just doing something with an agreement with the spouse, whatever. Anyway, we have at most a 35% unemployment rate. I think it's 22% because that's what John Williams of the, Shadow Government Statistics claims. And he also follows the CPI in an accurate description. And I love the Chapman CPI, which a couple of years ago came out to show that it's between 8 and 10% for urban America. All right, so go to goldjackass.com website and bounce around, sign up for the newsletter, and getting a lot more interest in the newsletter in just the last couple of months. And I'm a little curious why, and I believe it's the rise of the cryptos and the more imminently perceived end of the dollar with its global currency reserve. That's my opinion.